Good afternoon and welcome to the Wall Street Crossover Show with Darren Sinden, who is market commentator for Admiral Markets, who sponsor the Wall Street Crossover Show. Right, we seem to be sort of looking at City AM's front page today, and they're all Apple, sort of Apple mania, or the inverse of that. Presumably that's because there isn't much going on apart from Apple.
No, I mean that's the big story. It's pretty quiet on most other fronts. In fact, what I've read this morning in terms of broker research, most people are saying that the dip represents a buying opportunity. Make of it what you will. As we said, it's the stock was the most pregnant with expectations. It's much easier for it to disappoint than to please the market these days. And it's what 13-14% of the Nasdaq, so it does matter. But I think it is a bit overhyped, and it's not the only game in town, really. Okay,
well, let's see what other games there are in town. We start off with the data released over the European session.
Relatively thin in terms of data points today, but there are a few bits to take our eye. Starting with UK retail sales for June and the month-on-month figure, which came in at minus 0.2% versus the forecasts of plus 0.3 and the prior read of plus 0.3%. So that was completely unexpected, and I'm not sure anybody really knows exactly why. People are talking about food prices as being a component of that, which of course are continuously being driven down. So it might be that the same amount of goods were sold, but the actual money achieved at the end of the day was less. If we look at the year-on-year figure, came in at 4% growth, but that was against a forecast of plus 4.9%, so almost 20% undershoot there, and the prior read of plus 4.7. So the Chancellor will be looking at that, and the Bank of England will be looking at that and thinking, is this a one-off, or will we see further declines? And of course, the question now is for a lot of people like clothing manufacturers and clothing suppliers, the retailers there, will they now be slashing prices? Because if people haven't bought their new summer wardrobes by mid-July, they're probably not going to do it without some financial incentives. So,
well, I'm not.
No, well, there you are. So it's
summer's nearly over.
Bit of a quandary. Well, it could well be. August isn't always the best month, is it? So there we are. And then moving to the continent, Spanish unemployment. Small crumbs of comfort here. For Q2, the unemployment rate 22.37%, ahead of a forecast of 23.1%, and moving down nicely from the prior read of 23.78%. Obviously, it's a horrifically high number still, twice even the high European average, and within that, much higher numbers for certain segments like youth unemployment. But it is moving in the right direction. How quickly it comes down from here, though, I think is a moot point.
Yes, it is. Okay, European movers.
Okay, well, it's actually quite a few things moving around this morning, but probably pick of the bunch, Credit Suisse Group, that's CSGN in Switzerland, trading around 28 Swiss francs, 28.68 to be precise. That's up 6.86%. Q2 figures exceeded expectations despite a dip in investment banking income. They made a profit of around 1.05 billion Swiss francs versus a 700 million Swiss franc loss in Q2 14. It's the maiden figures for the new CEO, Tidjane Thiam, although he can't really claim any credit for them because it was already done under Brady Dugan's watch.
Claims credit for everything else. Prudential, it was all his. He's just a man.
Well, anyway, he seems to have landed on his feet once again, yes. And was very effusive. He actually said today that they might raise capital and they might try and make a small acquisition. So, of course, the last time he came anywhere near an acquisition was AIA Asia, so which didn't go down very well.
That's sort of what I was thinking of. But no, I mean, good luck to him, and hope he does well.
I'm sure he will. And speaking of European giants, Unilever, ULVR, we've gone with the London line here, £29.29, up 2.45%. They had numbers today as well. Q2 sales ahead of estimates, and the company maintained guidance, but did note that consumer demand remains weak, which I think is also another warning sign for European and UK central bankers. Profits are actually down 18% on a year-on-year basis, although I think people need to remember that the prior figures had included disposals. Anyway, the market likes what it sees, and I think it believes they can get the margins back up. And
I mean, it seems to be a business where it's difficult to really make a pig's ear of things, but everything, when they say demand is weak, it's on a very high base, let's say.
Yes, absolutely.
A very safe base and a very steady base.
Yeah, I mean, the kind of products they make are are not really discretionary purchase items, and people will continue to buy them, but they might shop around and be a bit more, shall we say, guerrilleristic, if that's even a word, in terms of their purchasing.
Yep, okay, and we're on to the M&A.
Okay, so M&A, we'll back to the States and today, and UPS, United Parcel Service, UPS is the ticker, in talks to buy a PE or private equity backed rival, Coyote Logistics. Coyote Logistics, if I can even say that, is backed by PE giant Warburg Pincus. They've been involved in the group since 2007 and made several bolt-on acquisitions since then to grow the group. If a deal were to be done, it would be worth around 1.8 billion US dollars, and combined with UPS, Coyote would then be about the third largest of the third-party logistics providers in the USA. It's latest of a series of deals in the sector. FedEx bought, you might recall, TNT Express, the Dutch company, for around $4.8 billion earlier in the year. And XPO Logistics bid for the wonderfully named Norbert Dentressangle angle as well, and they paid about 3.55 billion for those. So two European names snapped up there. In terms of the size of the individual companies, UPS is pretty much twice as big as FedEx by market cap. Coming in around 87.6 billion US dollars, the valuation of FedEx around 47.6 billion. Interestingly though, FedEx shares have dramatically outperformed UPS over the last 52 weeks. FedEx has been up around 10.5%, whilst UPS shares are down about 4.33%. So it's probably not the last deal in the space, and it wouldn't surprise me if FedEx was still on the lookout for something else to bolster its.
Maybe they could buy a quality company like Royal Mail.
Well, there's always the chance of it spinning over into the UK, but I think probably the Americans would want to see some of the public service issues ironed out before they dictate.
Yeah, no, it's just it's interesting. There's another M&A. There seems to be quite a few sort of little nests of M&A sectors, mini sectors around, which are looking very encouraging, even though people are saying like the market as a whole is a bit toppy or whatever, but you do actually have the drivers for further gains.
Yeah. In selective industries, whether it's about scale or whether it's been about for whatever other reasons, I suspect scale is all important here in these logistics types operations. But yeah, there are deals to be done still. Yeah.
Okay, let's go on to the US data points.
Okay. A few more things to look at today than we've had earlier in the week. So first of all, our old friends' weekly jobless claims. Forecast here for a read of 275,000 new claims against the prior read of 265,000. A lower number than that would continue the declining trend since the mid-May spike. I think the Fed would probably be looking for a lower number as well, but again, we'll see what comes out of that. The Chicago Fed National Activity Index is next. That's another one of these regional Fed surveys about industrial activity. The forecast for a decline of 0.05, minus 0.05 against the prior read of minus 0.17, so lower, but coming off a low base, but it's struggling as a number to recover to the December 14 high of plus 0.73, and that's been true of a lot of these industrial activity indicators. And then the leading indicators for June also due out today. This is a composite of 10 individual indicators combined, so we're looking for a forecast of a gain of plus 0.2% against the prior read of plus 0.7. The numbers really started to rebound after a flat start to the first quarter of the year. So again, a positive number would be nice, and it'd be nice if it could be 0.2% or above.
All right. Well, let's look at our levels for the US session. Okay.
Well, in terms of pre-market movers, Cigna Corporation, CIUS, one we've focused on several times because it's been a bid candidate over the last quarter. $162, they're trading pre-market up almost 7.2%. And why? Well, Anthem, who we flagged, I should say, as a potential buyer of the business, is said to be very, very close to offering $187 per share for Cigna. We've heard this, the deal is about to be launched a number of times, but press reports suggest that that's indeed is what will happen in the next day or so. And then SanDisk, that's ticker SNDK in the US, flash memory manufacturer. You remember we talked about Micron being potentially a bid candidate for a Chinese company a few days ago. SanDisk have had their own figures this week. They had problems in the first quarter of 2015, but they've maintained their guidance for the whole year now. They say Q3 looking forward is in line with their trading expectation, and that these problems seem to be behind the company. The market likes what it hears. They're trading around $60.70, up a very impressive 12% pre-market. That seems that sector's back in focus.
It's a bit of a turnaround after being unfashionable.
Yes, and that actually might aid Micron's cause about trying to, if they do a deal with the Chinese, to extract a higher price for them. And then in terms of European equities, quite a muted day today. FTSE, we're looking at 66.60 on the downside, and 67.12 even for the upside level. The DAX really sort of searching for these directional cues again. So 11,500 is our downside level, plays 11,615 on the upside. Sorry it's such a wide range, but that's the way the market's set at the moment. But we've managed to tighten up the range in the S&P to 2110 on the downside, plays 2120 on the upside. And again, that market is particularly looking for a clear consensus of direction. And the Dow is now 17,850, plays 17,920 as the range there. Perhaps the most interesting move of the last couple of days has been the continued strength in the euro, and we're better again this morning, 109.70 now on the downside. So what had been previously first support and then resistance, now back into the role of support in the area around 109.60, 109.70. And to the upside, 110.20 is the new level to watch for, and the way it's been performing, it wouldn't surprise me if it's tested to then through that.
Yeah,
in the next.
so a few fingers burnt possibly.
I would think so, because it did. When it made that move down to 108.50, it looked like it could fall further. Aussie dollar 73.90 plays 74.30, so a slight narrowing of the range there. Dollar yen 123.57 plays 124.14, much of the same. They're just a slightly tighter range. And cable, it didn't like the retail sales figures, but to be fair, it's not exactly collapsed. So 155.77 is our downside level, plays 156.37 to the upside.
So maybe an opportunity there if you're bullish.
Yes.
Over that little dip that we had on that news.
Yeah.
Okay, well, Darren Sinden, market commentator at Admiral Markets, thanks for being present here on the Wall Street Crossover Show. That's it for today. We'll be back at 1 p.m. tomorrow.